Good morning, ladies and gentlemen. A very warm welcome to you on Business Today television. We start the week in markets at the fag end of July on a slightly weaker note. All through, we've seen in the month of July that the index has shed about 4.5%, mainly on account of absence of the U.S.-India trade deal, as also the fact that there has been little or no hope coming forward from corporate India as far as first quarter earnings are concerned, and more importantly for the last 4 months, March, April, May, June. Each month the index added and rose consistently. In the last 4 months before July began, the Nifty had added somewhere like 17%. So part of those gains are now being taken back by the market. Be that as it may, we are now at the cusp of the end of July, and this would be just the right time to analyze a very large fund which, ladies and gentlemen, is celebrating its 27th birthday. In our superstar fund section, we now cover ICICI Prudential large and mid-cap fund. These are details that will come in front of you. The fund, as I have said earlier, was set up in July 1998. It completes its 27th year of establishment, and since launch, each year the fund has appreciated by 18.5% CAGR, which essentially means that it started at 10 rupees. It's now at about 1,000 rupees as far as money is concerned. And hold your breath. In 1998, 5,000 rupees mattered a lot. So if you had a 5,000 rupee subscription on a monthly basis as a systematic investment plan in ICICI Pru Large and Mid Cap Fund, that amount, hold your breath ladies and gentlemen, would have been 2.75 crore rupees. You would have invested a measly 17 lakh 21,000 rupees, but that amount would have been deposited month on month. So if you multiply 27 into 12, you would have invested 17 lakh rupees over a period of just a moment. So it's 27 years into 12 months. So that's about 324 months. So you would have put in a small amount of 5,000 rupees for the past 324 months, and that amount would now have been about 2.75 crores. So making supernormal returns in the easiest possible way is extremely possible when you want to create long-term wealth. But people, investors and especially traders, pay a lot of attention to F&O, where they lose crores and crores of rupees, but they won't put in a simple SIP, which ideally everybody should be doing. Prudential, ICICI Prudential Large and Mid Cap Fund has 89 stocks in its portfolio, and when you look at how those 89 stocks are invested, the total AUM is about 22,850 crore rupees, and out of those 89 stocks, about top 10 stocks are 33% of the portfolio. So that would somehow, if you look at 22,800 into 33%, about 7,500 crore rupees is invested in top 10 stocks, and about 19%, which is again somewhere like 4,300 crores, is invested in top 5 stocks. Now let's look at the portfolio. As I have said, it's an unusual fund. You will have stocks like Maruti Suzuki, L&T, SBI Cards, Axis Bank, Alchem Labs as among the top 5 or 7 stocks in its portfolio. It also has Reliance, it also has ICICI Bank, and of course IndusInd Bank and Axis Bank too, but they are lower down in the portfolio. So out of 89 stocks, if you look at the average price to book ratio of this fund, which is ICICI Pru Large and Mid Cap Fund, that is somewhere like 3.8, and the portfolio PE, the overall PE of the portfolio is a manageable 28.4. Let's look at some very, very interesting facts as far as ICICI Pru is concerned. It's a top quartile fund. There is absolutely no doubt in this. When you look at the long-term returns of the fund, which are in the vicinity of 10 years, 7 years, 5 years, it's always been in the upper quartile. Even on the Y to date basis, which is starting from December 31st, 2024 till almost the end of July, the fund is ranked first. It's given a return of 7.5%, handsomely beating the large cap index on the BSE, the large cap and mid cap index, and of course the category average is actually negative. So ICICI Pru large and mid cap fund has handsomely outperformed not only its base index but also its category in the past 7 months that we've seen, giving a return of 7.5% versus a negative return of 0.8% on the category of these funds, and it stands on the first rank out of 64 funds in the large and mid cap category. Shift your focus to 10 years. The CAGR return for the last 10 years is 15.4%. It's outpaced both the category and the index, and out of 18 funds which have a history of more than 10-year operation, ICICI Pru large and mid cap stands at third rank. In a 7-year period, the returns are even better, 18%. Remember, when you hear investment advisors going in for the 5 or 7-year period as far as fund holdings are concerned, that's the reason. The fund manager gets a bit of time to outperform the broader markets, and you have at least 1 or 2 bull or bear cycles. So 18% CAGR, it's better than the large cap average of 15.5 and far better than the index, which appreciated 14.3%. Here again, ICICI Pru mid and large cap stands on first rank out of 19. For a 5-year period, the rank is second, and the CAGR return is a stellar 27%. So if you divide 72 by 27, your money has doubled in 2 years and 6 months. So that, ladies and gentlemen, is the power of simple compounding, the power of choosing the right stock, holding on for a long time, and more importantly, putting in a monthly SIP. All this is really, really very easy in the world of investing. You just have to do it once. Sit and watch paint dry. I mean, good quality investing involves little or no work. All it involves is a lot of patience, ladies and gentlemen, which sadly 99% of the people don't have. Somehow that needs to be inculcated over a longer period of time to make supernormal wealth. So ICICI Pru mid and large cap fund is one of those funds that has given phenomenal return over not only medium and short term periods, but also over 27 years, where it has compounded between 17 and 18%. This is not as if that the fund had consistently risen up through and through. There have been times when ICICI Pru large and mid cap fund had a down period. Its worst year was between October 2007 and October 2008. Remember, this is the Lehman crisis. This is the downfall of Bear Stearns. This is the crisis of a global magnitude. In that particular time frame, ICICI Pru large and mid cap fund had lost 53% of its net asset value. But look at the best year. That was between February 1999 to February 2000. This was the dot-com bubble. In this case, the fund had appreciated 2.3x, which is 231%. So remember, when funds fall, they fall lesser than the market, and when they rise, quality funds outperform their benchmarks. Similarly, if you look at the worst month, it was in the COVID period, February 2020 to March 2020, the fund had lost 36%. Best month was when the fund rose 42%. So best is better than worst, which means the percentage rise is often better when the funds are up, and the percentage fall is lesser because fund managers take adequate protections in terms of hedges. They know when to exit, when to enter. So ladies and gentlemen, as we have been often telling you in the Superstar Fund show, that buy quality, buy it for the longer term. You might think that 27 years is a very long time frame, 10 years is something that you can't wait, but you can do it for your child. As we all know, time passes in the blink of an eye. You will not be able to remember 27 instances over the last 27 years immediately, but if you make a simple 5,000 rupee investment, 10,000 rupee investment, 15,000 rupee investment each month, and if you're really smart, you can increase it by 5-10% each year, the amount of salary that you get made. In a period of 5, 7, 10 years, you will create supernormal wealth for yourself. And that is when you will understand the intrinsic power of compounding, how good quality mutual funds deliver stellar returns with little or no tax outgo on a yearly basis if you hold them for the long term, and of course create supernormal wealth. That, ladies and gentlemen, today was the topic of Superstar Funds, the coverage of ICICI Pru Large and Midcap Fund. This is a fund which celebrates its 27th birthday in the month of July and has given phenomenal returns to patient shareholders, unit holders. Return since launch is 18.5% CAGR. I hope you enjoyed that show as much as I did in researching this fund. Remember, it's always good to invest for the long term. The kind of money that you can make sitting quietly and peacefully far outstrips the pain that you will undergo when you trade in F&O. Thank you for watching.
It all started with just one picture.